And joining me now is Ross McEwan in Melbourne. Ross McEwan, welcome. Your first results, you've got the jump on analysts by about 11 days. Is this all about being early to market with this $3.5 billion capital raising?
Well, there certainly were decisive moves in the market today with us going early, but also looking for $3.5 billion of capital. Also taking an additional provision of $807 million based around what we're seeing in economic factors. And also, unfortunately, cutting the dividend down to 30 cents per share, which won't, of course, have pleased our retail investors, but I think very, very essential in the circumstances we're finding ourselves with this crisis.
Yes, well, Ross, a lot for the market to absorb there. You mentioned, I mean, your profits are down over 50% to $1.3 billion, I think. You mentioned the cut in the dividend, but you are still paying 30 cents. And at the same time, you're also raising $3.5 billion at very low prices and diluting shareholders. So what is the thinking of you and the board there?
Well, first off, the underlying results of the bank are actually quite strong, but a couple, two large provisions, one around economic changes, but also we took a provision against capitalisation on our balance sheet of near on another billion, which dented the P&L, but the underlying results were strong. We did balance off the difference between how much capital we raised, but also continuing a dividend, because we know it is important we've got 48% of our shareholders are small retail investors, and they do rely on that dividend. And we also wanted them to actually help us out again with putting more capital into the bank. So it was a balancing act. We looked through many scenarios and thought this was probably the best and fairest for all.
Ross, you painted a bleaker picture of the broader economy than Treasury, I think, including 11.5% peak unemployment and GDP not coming back to pre-COVID levels until 2022. So some are surprised, really, at this expected credit loss figure that you've got there for COVID of $807 million, that it might be a bit light on.
Well, given the scenarios we've gone through, we thought that was about the right number. We have to review that every quarter and more formally on a 6-monthly basis. But we thought, given what we're seeing from the economic changes looking forward, you're thinking about GDP being down, house prices likely to come down a bit over the next 6 to 12 months. And also unemployment spiking up. We took those through, and the number we thought was right was 807. It adds to an additional provision that we have as well. So at this stage, we think we're well provided, but we will continue to assess that.
And you're comfortable about commercial property in your portfolio?
Well, the impact on commercial property will be very varied. I mean, you've got some properties doing very well, industrial warehouses and the likes, but bigger impact on commercial retail with the close down of just about all of the cities in Australia and the impact that will have. So it is varied. The owners of those properties tend to have a lot more equity involved in those properties now than they did during the global financial crisis. But we are looking to assist wherever possible for those providers on a one-by-one basis.
Yeah.
But we've looked across all sectors at the moment, and we've assessed what we think will happen to them in the short and to the medium term.
Ross, 650,000 businesses and retail customers have called NAB asking about assistance. Now, the government has, in the last few days, been a little critical of the banks for dropping the ball and there not being enough connection and loans not going out fast enough to bridge, especially towards WageKeeper. What's been your response?
Well, first off, the JobKeeper program is vital, and the government, quite rightly, has put a lot of effort and money behind that program, and we as banks need to get behind it as well. We've had 650,000 customers who have rung in and looking for some form of help, not always needing help through the principal and interest deferral. Some of them just needed increases in overdrafts. Some of them actually decided after a conversation just to sit tight and do nothing. Some have moved to interest only. So it's been a variety of different options for customers that we've been dealing with. But there's been a lot of pain in this marketplace because of the way this virus impacted, and cities and towns had to close down, which impacted businesses pretty much overnight. So we've been there trying to support as many of our customers as we can, but also being very careful not to put more debt into people's hands that they just cannot pay back. And I think we've been having some very honest conversations where no additional debt has been the right answer.
Right. We've got a lot, no doubt, of super money going into this capital raising, a lot presumably of industry super money as well, which is interesting. But if you're looking for a growth story after the Hayne Royal Commission, people were saying, oh, banks are going to be like utilities. So, Ross, moving into your new position running NAB, what is the strategy? Where is the growth going to come from after all this?
Well, look, we have done a review of the bank over the last 4 months. We're in the right portfolios. The strategic tilts are minor in the sense of we're going to certainly stay in the business and private banking business. We've got a lot of work to do there to make that the best it can possibly be. We'll continue to invest in our corporate institutional bank, and we've got some areas of specialisation that we want to follow. And our retail or commercial business has been, I think, underinvested in, and we've got a lot of work to do in that area. So I think there's good opportunities in this bank that we'll take, and I think it's a case of doing less but doing it better is probably the answer for NAB, and specialising in areas and putting all of our resources into those as opposed to spreading them over too many areas.
You are the business bank, of course. When it comes to small and medium businesses, how do you see the end of this 6 months for a lot of businesses? Because I think you were fairly clear up front today that for some businesses, you may well have to have conversations with them if it's not in their interest or in your interest to continue.
Well, I think the vast majority of businesses that were good businesses going into this crisis will be good businesses coming out, and we'll be there supporting them. There have been a small number of businesses that weren't in good shape beforehand. I think we've got to be very careful as an industry and as a bank of lending these businesses more and just getting them into more difficulty. I think we have to have those. But the vast majority of businesses, I believe, will come out of this with support, and they're getting that support certainly from NAB and from the government. And this is, all parties leaning in very strongly to help getting this economy back going again. And with that support, I think it will be a recovery. It may be slower than we anticipate, but I think there's so many businesses that want to get going again, and the public themselves will also want to get back into a normal situation. Yeah.
Golly, I'm thinking about, were you running RBS now in England, how different that might be. But one of the things that you did a couple of years ago is you raised $5 billion, I think it was, in CoCos or hybrid deals. Now, last month here, you tried to raise nearly $2 billion of hybrid capital. You had to pull that because of the market. Things would have been quite different if you'd got that away, wouldn't they?
Yeah, but it was quite an interesting why we pulled the capital raise on that particular point, or the capital portion of that. Was because we just didn't think it was fair to the retail investors to go in under one scenario and all of a sudden, because of the crisis, find that the pricing had moved dramatically on them. And our view was, don't damage retail investors in that way. So we pulled it, and I think it was the right thing to do. Today, we're giving our retail investors the opportunity to go in to increase their shareholding should they wish to do so. It's a very clearly articulated offer, which gives them options. So I think it's very fair to retail investors. The institutionals have had their day today, and retail investors over the next 10 days get the opportunity in a very fair way, both around pricing and transparency.
Right. Finally, Ross McEwan, if I'm an investor and looking at, say, the business bank, NAB, or maybe a bank, another big bank that might be more on the household side and mortgage side, coming out of this crisis, because we've got risks on the property side as well, where do you see the riskier play, if you like, exposure to the housing market or exposure to small business?
Well, they're all going to be impacted some way or another by what's going on, because business impacts into the individual and their ability to pay their mortgages. We are actually a very big secured business, both in the business side and in the personal side. And I don't think that's well understood. Greater portion of our business is now secured across onto the property, even some of our small business banking. So I think we're in very good shape. The moves we've made today are very decisive. They do say that we want capital to see our customers in good shape throughout this crisis and be there for them. At the same time, we want to emerge out of this in a very good shape so we can take advantage of opportunities that come our way. So, I'm very much a fan of going early, going as big as you can, and be on the front foot.